I'm going to start off on a high time frame. We can have a look at some of the real life price action as well, which you can see, of course, the market is still coming down, right? So let's see hourly, little bit of an attempted bounce taking place over here, but for the most part, bearish price structure still remains. And if you have gone through, at least half of the course content, well, this shouldn't surprise you, right? Utilizing some of the very simple tool sets that I've given you, like trying to identify ranges and trends. Well, you'd know that we approaching near to where a range low would be, but at the same time, if you viewing this as a trend in motion, well, this could be the start of a major downtrend. So it's a lot to focus on. And the reason why I say that is because while we're below the 21 EMA on the weekly time frame, the 9 and the 18 exponential have also crossed in a bearish posture. So these are things that we actually have to really consider when it comes to forming our biases, because at the end of the day, trading and investing really is that, right? It's a game where you form a bias based on the evidence that's set before you, and you create a probabilistic outcome where you say the probability is higher that it's going up, the probability is higher that it's going down, or the probability is we're just going to chop around because we're range bound. Once you can form that bias and set your plan in motion, you can start to look for opportunities, and then most importantly, the invalidation level, which is where your idea, of course, fails, right? So all very important things to look at when it comes to the markets. Now, I'm going to form a little bit of a bias on a super high time frame. This won't be new to you because I did cover this very briefly last week, so I'm going to touch on it ever so slightly. And what that is the bias for an 18.6-year real estate cycle being the most liquid market in the world, which tends to drive the rest of the markets, being the stock market and therefore crypto. Now, if real estate prices go up, people do sometimes tend to seek more risk, and that has a spillover effect which goes into the stock markets. And then when the stock markets go up to a certain point as well, and they're not getting enough gains, then there'll be a spillover that goes into crypto, and consequently all these cycles kind of match up. Now, if we were following this bias and cycle, well, we would be somewhere over here moving into the winner's curse phase. So we are in a dangerous time within the market. But with that being said, this is where the majority of the gains are made. For anyone that doesn't know what the Pareto effect or Pareto principle is, I really recommend that you Google that, look it up. I'll give you the story in a nutshell. It's the 80-20 rule, and it applies to most things in life, right? The 80% of the outcome usually comes from 20% of the efforts. Or also, when it comes to markets, 80% of all your profits will be made in the final 20% of the bull run. And if you're viewing the 18.6-year cycle as this entire move over here, well, most of the gains are to be had in this final phase over here, which is the final 20%. You can say, give or take, from this region over here. Now we're starting to move parabolic. And this applies to all sorts of businesses, everything that's out there. Even in the sales environment, you'll find that it's the top 20% of salespeople that literally make 80% of all the money for the company, and 80% of all the commissions go to those 20%. So it's definitely beneficial for you to understand this rule, because you can apply this when it comes to trading, right? Now, the important thing is we want to know, well, where are we within this cycle? Are we in the final 20%? Because a lot of people are calling for the tops, right? A lot of people are saying that the market cycle is over. Get ready. Biggest stock market crash that we've seen since 2008 is right here upon us. We have an inverted yield curve that's starting to turn back towards the upside. Usually that's where you see major recessions and markets are going to crash. Well, all that we can do is use the information that's in front of us, form that higher time frame bias, which is going to help you to understand when to allocate into a crypto portfolio and which part of the crypto cycle you're within. So we have our 4-year crypto cycles which fit in alignment with this 18.6-year real estate cycle coined by Phil Anderson, right? But we also have various liquidity cycles that occur within those cycles as well, which just so happen to line up more or less following the halving cycle for crypto. So as a good point or reference point that you can use as an anchor to determining where we are within the cycles. You can anchor off 2 points. I would say in crypto, you can anchor off the exact cycle lows. That's anchor point number 1. And then the other anchor point that you can utilize is going to be the halving cycle, which is pretty objective, right? It's set in stone when you get the halving cycle. Now, what I did over here is I measured from the halving cycle date specifically to the all-time highs on total cryptocurrency market caps, right? That's all coins, because if the total market cap is moving up over time, it means most of the coins are making you money, which means that you can be allocated into almost anything. This is what we typically see in crypto, where it's like throwing a dart at a board of different coins, and it literally doesn't matter which one you hit. They're literally all going to go up at a certain point within the cycle. Not all points in the cycle, but at a certain point in the cycle. Now, if you do look at this data over here, and this is one way that you guys can go and ultimately, map things out, think like this. And we're always learning more. I'm always finding new ways to try and analyze the way these markets work. One of the most recent ways I've been focusing on is really what happens following the halving cycle. And the reason why is because it's relevant, because we recently just passed the halving, right? Just for those of you that are new, you don't know what that is. The halving cycle is where Bitcoin's mining reward gets divided in 2. Remember, the miners used to receive 50 Bitcoin for every 10-minute block that was solved. They use highly complex computers that solve highly complex equations. And for each equation that's solved first, the computer that gets to that equation first gets a reward in the form of Bitcoin. They solve that 10-minute block, right? And all these blocks stacked together is what creates the Bitcoin network and strengthens the Bitcoin network. So every 4 years, that divides in 2. Went from 50 to 25, and then about 12 points, I think at 7.5, and currently we're somewhere at like the 3 point something. I think 3.2 or something is the current block reward. So this creates a little bit of a supply shock on the market, because it makes it harder and harder to get, of course, the Bitcoin, and consequently price tends to move up. But also when you line up the liquidity cycles, the M2 money supply just so happens to line up with these zones over here where, economies start to increase as well, because you have a lot of elections happening at the same time all around the world, and they want all economies to be strong going into those elections so that the ruling party has a chance to win again. And this is not only in the US, this is all various different countries. You'll see there are tons of countries whose election cycles line up with the US election cycle, and consequently you usually have this final blow off top phase, right? So if you mark off the yellow line over here, which I simply use an indicator, any of you can use this. You can just write here Bitcoin halving. There it is. Let's just spell that correctly. So Bitcoin halving cycle. There we go. Events. There we go. It's this one over here. I use this one over here. I'll make a star next to it. Kevin D car. It's got like 218 people that followed. So I mark this off on the chart, and then I measure from there to where the top was. Well, this was 546 days. Now your top is set in, right? So we do the same thing over here from the last cycle, from the halving cycle to the cycle top, 546 days. Therefore, this would line up somewhere around here. You'll remember last week we looked at the presence of the potential for a massive bull flag, and we saw the same thing when the market was going down, right? We saw the bear flags. Here you have it. Price came down, and you had this absolutely enormous bear flag, which had the measured move of the pole taking you pretty much to the bottom. Now, there was only one massive one that you can see over here. There we go. And it comes down. Now you have the same thing occurring, but the inverse, while the rest of the market gets bearish, whilst the timing cycle suggests that, well, we still have a lot of good days ahead of us, more specifically 408, which is about a year. It will take you some point into mid-October where you could see the cycle top. Now, the reason I'm mentioning all of this is because we are, of course, trying to establish when is the best time to build a portfolio. Should you be doing it before the halving cycle, or should you be doing it after the halving cycle? A lot of the secrets are in the Bitcoin dominance, and we're going to get to that in just a moment. The answer, though, because I'm not going to leave you here guessing, the answer is pretty simple. It's most of the time best to be fully allocated into Bitcoin pre-halving, and then Post-halving is where you're starting to look for the opportunities to establish your bigger positions. However, you can be in a portfolio pre-halving at the bottom over here, should it be strong coins, right? But Bitcoin dominance, for the most part, leading into the halving cycle, will outperform the majority of crypto coins. So for the most part, within this phase over here, you're looking for a relatively concentrated portfolio. We've now finished that phase. We're now moving into the next phase of the market cycle, and the expectation is that we have another 12 months ahead of us of upside potential. And this is where the altcoins generally perform. So within this phase over here, you're looking for a more diversified portfolio. That's point number one. But the question is, well, when do you do it, right? You do need to use a little bit of savviness when it comes to establishing those positions by still gauging whether the trend is up, down, or stuck within a range. And you probably want to wait for confirmation. So to just put it into perspective on this chart over here, the expectation is following this long consolidation over here. I have covered it on the shows, and I'm sure most of you have seen this, so I don't want to spend really any time on this, but we're looking at price to start to mark up somewhere within this zone. And the reason why I say that within this zone over here is, let's just expand that and I can showcase it to you. It's 160 days post-halving. What we've seen historically with all the other cycles is around that 160 days post-halving, like I've shown you over here, is usually where things start to get going. So if you measure out from the halving cycle to the point where things get going, from the halving cycle to the point where things start to get really exciting, it's usually, give or take, about 160 days. How far are we as it currently stands? Well, currently, we're literally sitting from the top to this point over here, 174 days into the correction that's once the top was set in. But if you go from the halving, well, we're 137 bars into, or following the halving cycle, into this current price action. So you're getting very, very close to that 6-month mark, or at least until the 160-day mark. Very, very close. The next thing that I want to look at over here is the prior cycles also start to get going should you measure, because I told you have two anchor points. Anchor point number one is you can use the exact bottom of each market cycle. Anchor point number two that you can utilize is going to be the halving cycle. So if we look at anchor point number one, which is going to be the cycle low, then you would see that this is the current cycle that we're in. We're in the purple cycle over here. And if you put on cycle 4, that's what it looks like, right? We are currently into this cycle. Let's just mark it off exact, 659 days. And as you can see over here, the prior cycle, which was cycle 4, really started to mark up around that 680-day mark. This is where things started to get exciting, and then you aggressively move towards the upside. If you look at the other cycle, which is going to be cycle 3, well, this one had a slower grind, and I actually believe that Bitcoin's following most similar to this cycle, which was cycle 3, 2016. It led into that absolutely glorious 2017 cycle top, which took 1,068 days. And this is usually where you're going to have the majority of the gains in the altcoins in this final blow off top phase. So all in all, it looks pretty good, right? But it's not enough, right? You do need to look at clear levels of validation and invalidation, because you don't want to have too much confirmation bias. This is just to outline the roadmap and the plan and to set the bias for where we think things will go. But we need objective reasons for when to actually go long. So we'll get into that in just a moment's time. Now, the whole aim over here when it comes to portfolio structuring is that you want to, when the rest of the market is accumulating, so you see the market bottoms early, adopters buy, 200 moving average starts to flatten out. You might see that multiple times within a cycle. You would have seen it at the bottom with the FTX collapse, where price dropped below the 200 MA or EMA, and then on the daily it started to flatten out, and then eventually it was reclaimed and we led into a massive move up, right? Right now we're seeing something very similar. The 200 MA or EMA is starting to flatten out, and price right now as it stands is actually capped below it. But you want to start to establish those positions before leading into the next advancing stage, which you can see comes after accumulation. And then you need to identify distribution, which is where you also want to distribute with the main whales that are driving the market, the institutions, etc., that will be driving price into the next downtrend. So the question is, where are we within this phase over here? This is the graphic that I gave you guys to look at in the Whale School course, which is concentrated versus diversified investing. As mentioned, pre-halving, the best time to be concentrated is pre-halving, right? You're looking to only hold a couple of coins because you need to be very, very selective, choosing only winners, right? For the most part, as I said over here, it would be Bitcoin, ETH, and Tether, right? But just before the next run-up phase, which we are now anticipating could be any moment within the next maybe 30 to 60 days, we could begin with that run-up phase. We want to be diversified. Now, as the disclaimer says over here, these tokens are for illustration purposes, right? Please do not go and buy these absolutely rubbish coins. There are much better coins out there. This is for illustration purposes. The point is, you want to be holding at least a widespread portfolio before the next markup phase occurs within the market, because it will take too long. You know, if you start to realize that Bitcoin is now topping out, so money is going to rotate from Bitcoin, most of the gains have been had. Remember what I described over here? I said this is what typically happens. Real estate runs really hard. Then people start to take some profits from real estate into the stock market. Stock market runs even harder. Then people take profits from the stock market and they want something riskier, providing better returns. So they start to move into crypto. And it's kind of the same thing, right? Bitcoin will stop providing returns. It will stall out, it will flatten. It doesn't mean that it will suddenly dump out of nowhere, but it will slowly start flattening out. The gains that we've had over the past couple of months to year will reduce, and then people will seek additional risk, right? So you want to be established into these coins before the masses come and look for that risk, which is going to be leading into the run-up phase. And one way that you can use that or do this or understand when to get into these coins is you can look at things like this, right? Focusing on the timing cycles and studying the charts. Now, as I mentioned, there is a lot of value when you study things like Bitcoin dominance, the ETH BTC chart, as well as the altcoin season index. Now, the altcoin season index, the reason that I want to showcase this is because we've never seen a market cycle top. As I've shown you over here, chances are we are 50% into the cycle and we have another 50% left to go. And a lot of people are starting to talk like the cycle is completely over. And this was the shortest cycle that we've ever had. I can showcase to you, that we can't use that one, the first cycle, but the second cycle was the shortest one that we've had. We're not using the first because there's not enough data. That's why I'm just going to isolate that out. It's going to skew the numbers too much. But this was the shortest cycle that we ever had, was 746 days. And that was, of course, the cycle that occurred over here in, let's just quickly see that, 2013. So it was 2013 cycle. That was the shortest one, 746 days. Now, even if we were to have the shortest cycle ever, firstly, the characteristics of this is completely different. This was a left translated cycle. You can see the trajectory that we're following right now is nothing like that, right? The trajectory over here was vertical straight towards the upside as a left translated cycle. Left translated just means a shorter cycle, more aggressive, a lot of parabolic advancements occurring across the board. We don't see that in Bitcoin right now. We don't see that in really any of the cryptos right now. Most of the cryptos are running flat. Therefore, I think it's very unlikely we're in that cycle, and most likely that we're in this cycle. So we can also go a little step further because we're looking for additional signs for confirmation, right? We want signs and symptoms. Remember, I speak about it in the course. Signs and symptoms of market cycle tops are things like everybody saying, well, Bitcoin's definitely going to 100K next, or 150K next, or 400K next, and the targets become higher and higher. You have celebrities coming into the space. People will be phoning you saying that, I should have listened to you. I should have listened to you and bought Bitcoin or crypto, and do you think it's too late to get in? This is the type of commentary that you'll hear. You can go look in the course content. We clipped a whole bunch of different article headlines for signs and symptoms of what you'll hear tops versus at cycle bottoms. And most of the time, you're going to get multiple people contacting you because they know that you're into crypto. That's a major, major sign that you're nearing the end. Now, the other thing that we can look at, as I said over here, is the altcoin index. Now, the market tends to top when the altcoin index is at the extreme highs, not at the extreme lows, right? This works kind of like an oscillator, right? So when it comes into the green zone over there you go, when it comes into the green zone over here, usually this is when the market's going through some form of reaccumulation, especially post-halving. If you go and isolate this down, which I don't have enough history on this particular one to go back far enough, but if you go and look back, you'll see post-halving, you will never ever have a cycle topping while this is all the way at the bottom, but instead when the altcoin season index gets into the top phase over here, that is where the market cycles top. And as I said over here, there is a lot in the Bitcoin dominance. So let's quickly move that up over here before we get into the next part. The Bitcoin dominance also showcases it. Bitcoin dominance is currently topping, it's not bottoming. Now, market cycles, which I've got, let's just expand this up a little bit more for you. The pink zone over here, there we go. This is your Bitcoin price chart. And what you'll notice is Bitcoin cycles top, or Bitcoin cycle tops tend to occur. Let's move it on to the yellow highlighter. They tend to occur when Bitcoin dominance bottoms, right? And if you look at the next cycle top over here, double top, 1, 2, where was Bitcoin dominance? At the bottom. So similar to the altcoin season index, you can see over here, here's price, right? Is this the cycle top? Well, where is Bitcoin dominance? Where's Bitcoin dominance right now? The answer is Bitcoin dominance is topping and not bottoming, right? Why do we say Bitcoin dominance is topping and not bottoming? Well, obviously because if you have a look over here, it's coming into a very, very tight rising wedge. It's approaching the range high resistance over here. It's also approaching the order block. This would be a worst case scenario for altcoins if Bitcoin dominance were actually to make it into this order block. I think it's less likely, but it's possible. But the current trajectory that it's following over here, while price is compressing and tightening into this final apex of the wedge, tells you that it's probably going to top out and start to drop very, very soon. And that likely leads to the next move up in the rest of the market, right? So that'll help you form your bias. The other thing that you can also notice over here is that when ETH BTC is topping, that is usually where you also see ETH top and the cycle top. When ETH BTC is bottoming, that is usually where Ethereum is bottoming, which consequently means that it's additional support, that's where your altcoin sector is bottoming. Now, all of you should go onto YouTube over here to Ran, who's crying. You can see over there, no more alt season. Look at those tears. Look at those tears over there. Now, I'm just joking, guys. Obviously, you know, we trying to talk into the sentiment to get views. I know that Ran doesn't actually believe that. But the point is over here that these are the types of things that you can utilize. And everyone knows that we want to time this correctly, the money flow phase, moving from Bitcoin into ETH at the right time, and then large caps, and then alt season, because money flows, right? As I showed over here again, money flows from real estate into the stock market, then it spills over into Bitcoin, which then spills over into ETH. And here's the evidence, right? Bitcoin dominance nearing its top, ETH, BTC nearing its bottom. And then once you finish with that phase, you move into the large caps. Generally speaking, this will be the layer ones. And then you go into full-blown alt season, which I did mention occurs in the final 20%, right? The Pareto principle. Okay, I'm just laughing at the comments over here. These thumbnails trigger me hard. Guys, just understand it's the YouTube algorithm. Don't take it too personally. Okay, so your only job is to establish a portfolio at the right time. I think I've pretty much made it clear. Now is the right time. Now is the right time to start to look to establish that portfolio over the next, pretty much I would say, if you want to play it safe, over the next 3 months. But we do need some tools, right? We need some tools to give you additional confirmation, which is what we're going to get into in just a moment. You only have one job when it comes to timing the cycle. Your next, at least, thing that you have to do, the next most important thing, is to protect the capital. Now, we're not even partnered with Ledger, but Ledger have given us a link which gives you access to the new ledgers with a little bit of a sign-up bonus. I don't know, I think they're going to drop it in the comment section if you guys do want to have a look at that. Now, we're not advocating that you buy the absolute top of the range one, although if you take your crypto seriously and you have a lot of money, you probably should. But at the very, very least, just go for the baby ledger. You can even look at things like Trezor, you can look at any other hardware wallet that's out there, but at least have your your longer term portfolio that you're planning on building safely stored, right? The worst thing that can possibly happen to you is that you lose all of your crypto due to some form of a hack. And guys, I promise you, we hear about this not like out in the whole cryptoverse, but we hear about it here at Banter every single day. Every week there's someone that comes to Whale Room, asking us if we can help them to recover their funds. They clicked on some link and they got hacked. So just have some sort of a cold storage wallet. What is a cold storage wallet? A cold storage wallet means that your coins are not tied to a software wallet on the internet, which is able to be hacked, right? They have to physically access the seed phrases or your actual hardware wallet and type in the codes to approve a transaction. That's what would be required for them to steal your funds. There's no possible way of getting hacked through one of these hardware wallets. Okay, so now some tools that you can utilize to time the next major move or the advancement phase, right? So we spoke about going through accumulation or reaccumulation. In this instance, it would be reaccumulation because we already went through accumulation at the lows around $16,000 Bitcoin, and then we already went through the advancement phase. And then in this instance, it says distribution. But if the cycle persists, it would then be viewed. Number 3 could theoretically be reaccumulation into another markup phase, and technically speaking, that can just keep going, right? Until eventually you get distribution, and then you lead into a declining or markdown phase. So some tools that you can utilize, I've showcased over here, the Bollinger Band width percentile. You've seen me use this multiple times before. This will help you to time major market moves before they happen, because it shows you where volatility is low, and following low volatility, you usually get high volatility, right? The ebbs and flows of the market and life. You go through winter and then summer, winter and then summer. It's like contraction, expansion, contraction, expansion. This is typically what happens within the markets. So if you look over here, this is more or less how it would work. And this is not only for the long side, this can also theoretically be for the short side. When the BBWP or Bollinger Band width percentile contracts to incredibly low levels, that's basically where you want to establish your next positions, because that means that you're within this phase. You're in the accumulation, or it could mean that you're also ready for the distribution. That's why I say it's direction and neutral. It's not specific to say the market's definitely going up or the market's definitely going down. When this expands, it's just telling you a big move is coming. It could be up, it could be down. You utilize multiple other confluent factors to determine which way the probability is higher. Now, based on how we've formed our bias for this market cycle, we believe the probability is higher that we'll reclaim some key levels, and then the expansion will happen, and it will happen to the upside, and we'll go into the next advancing stage onwards and upwards. And that's why we want to establish those positions. Now, you can use some very simple tools like the RSI. You can see over here, the RSI crossed towards the upside over there. The BBWP was very low, and then the BBWP started to expand rapidly towards the upside. And that just simply means the Bollinger Bands started to expand away from each other, and that led to the big move up, right? So you would have gone long over there at $16,894, and then you would look for the signs and symptoms of a cycle top, right? What is the state of the psychology of the market, the euphoria? How many YouTube views are there? I bring up these metrics often. You can look at all these various different factors, and the RSI starts to stall out, right? And then you get very, very high prints hitting quite literally the 100th percentile, which is as wide as the Bollinger Bands can possibly go. And that tells you this move is nearing its end. And then it flattens out a little bit, right? So that would have been your close, your long at 28,380. Now, if you go onto the live price action of the chart over here, well, you can see the BBWP has once again come into a period of incredibly low volatility, contracting literally to zero. When it hits zero, it prints these blue lines. That means the Bollinger Bands are tight, the tightest that they've ever been before. And then you're waiting for the next big move. Oftentimes, you will get a fake out, right? Which is why you need to wait for confirmation. Theoretically, confirmation would be multiple closes above the 10 percentile mark. I just manually add that in onto my chart there with a green line over there, suggesting that when we see closes above the 10 percentile mark, we're looking for expansion. This is quite a scary thing for the current phase of the market. The reason why is, well, we formed our bias based on all these various different factors to suggest that, prices are likely to continue to trend up. But this is why we need further confirmation, which I'm going to get into the EMAs that you can utilize to help you catch that trending move. But the reason it's scary is because theoretically we have confirmation of expansion, but price is expanding down, which means that it could get ugly, right? It could definitely be distribution. And this is how you need to constantly check yourself and monitor the charts, right? Okay, but as I mentioned, oftentimes you will get a fake out. You'll get the first move up, which will be fake, and then it will recontract in there, and then bulls probably take back control, and now you're looking for expansion in favor of the bulls. And I think this is probably what's going to happen. At least that's my bias right now. That is my my plan for what's going to come next. I'm thinking that's the most likely outcome. So some very easy tools any of you can use. We've spoken about it before. It's covered in the course. The 21 EMA. I'm going to give you some other ones as well, but the 21 EMA. Now, you'll miss some of the move if you wait for the confirmation, but you definitely won't lose money, which is a good thing, right? That's it. At the end of the day, you're here to manage risk. Now, theoretically, price is capped below the 21 EMA. The 21 EMA is angled towards the downside, and you're busy expanding, because theoretically this is not a trap yet, right? Theoretically, this is a confirmed expansion of the BBWP, which means this is a very dangerous zone. So to tie that in with, should you be establishing your longer term portfolios right now based on all the other factors that we looked at? I think the simple answer is that you can DCA, right? I see there's some questions over there. What is DCA? DCA is dollar cost averaging. So you can give yourself a little bit of leeway by dollar cost averaging, which simply means that you buy on regular intervals, whether it's every single week or every single day, or you can even go as far as buying every 6 hours. Now, you don't physically need to log into your exchange and execute manually the trades. A lot of these exchanges, which you would have signed up to unlock full access into this course, a lot of these exchanges will actually provide bots, right? You can set recurring buys. They have different terminology. Some might call it outright DCAs or dollar cost average bots. Others may call it recurring buys. You'll have to study the exchange that you're utilizing. But all you need to do is you need to say, well, hey, these are the coins that I like. I believe these are strong coins. So coin A, B, C, D, E, whatever those coins are, right? These are the coins that I believe are strong. They're going to do well in the next cycle. And in order to determine if they're strong and outperforming the rest of the market, all you have to do is measure that coin against Bitcoin. So to give you one example that's strong, we know that Casper is strong, right? Casper measured against BTC. So if you type that into a trading view like that, Casper /BTC, hit enter, it will provide you a chart. If the chart is moving up like this, it means that coin, which is Casper, is outperforming BTC. So you need to go and do the homework and go through the list to find the strong coins. And once you find those strong coins, you can start to set up a dollar cost average bot or recurring buy bot. You've picked, let's say, your 5 coins, your 6 coins, your 10, 15, whatever it is that makes you comfortable. As long as they're all in an uptrend, those are good picks. Then you can go and say, well, I have $10,000 or I have $100,000, whatever the number is. Let's say you have $10,000. There you go. You have $10,000. You put the $10,000 into the crypto exchange. Okay. Once you put the $10,000 into the crypto exchange, you can say that I want to allocate 25% or 20, because there's 5 of them, right? So 20% into each of these coins. And I want to split those buys over a 3-month period, and I want to buy every single day at whatever time, 10 a.m., wherever you are in the world. So that would be one solution, right? Okay, so let's just quickly see the chat. Casper, not on all exchanges to use DCA bot. Yes, you're going to have to shop around, right? You're going to have to shop around. It's not all going to be that easy on all of the exchanges, right? So you need to go and shop around to see which exchange to utilize. Now, that's one way to do it if you want the exposure now. The other way, and that will give you the exposure to the market, but you're still subject to the volatility and the drawdown. But the dollar cost averaging helps to average out that volatility. So if the market is moving like this and you are DCAing in or dollar cost averaging in, you'll have an average entry over there, right? That's kind of the idea. Probably better shown over here. Let's just quickly draw that one more time. One more time, let me just draw that over here for you. So if the market is chopping about like this, there you go, and it comes up over here, and it does this, and it does this, but you said a dollar cost average bid, well, then you probably bought on average within the middle over there. So it keeps you relatively safe. But for those of you who want to go a step further and you want to be very, very safe, but it means you might be buying higher. You might want to wait for Bitcoin to confirm that it's reversing the trend by breaking at the moment above the previous lower high, which is going to be $65,050. That's today. This changes as time passes. Not only will that be breaking the structure by getting a higher high for the first time, so you're looking for price to move up. Let's just put that back again. You're looking for price, here it is, to move up like that, create a higher high, throw back, create a higher low, and then you can start to buy. Not only will it be breaking structure, but at that point, at least you are also breaking above the 21 EMA, and that 21 EMA can start to angle towards the upside. And now you have further confirmation we truly are in this phase, and you're protecting your capital, right? And the reason I give so many different scenarios to all of you in the workshops and throughout the course content is because we have so many different people over here with different financial situations, different bankrolls, different circumstances. Some people want aggressive gains and they want them now. Some people are very, very conservative. Some of you, you may be 80 years old and you need to protect your capital, but you want to outperform your Rothschild or whatever it is that you invested in that's providing lackluster returns, but you want to do it in a safe way. Then that's why I'm giving all of these valuable tools. It's up to you to put it all together and utilize it. Now, the other thing that you can use over here, and I'm just going to quickly turn off the 200 EMA, one that's a little bit more aggressive for those of you out there that want quicker in and out entries, is the 21, or excuse me, not the 21, it's the 9 and the 18 exponential moving average. So on my chart, and I'm going to clear this up over here, on my chart I've placed the 9 and the 18 exponential moving average. But this is where you need to find out, are we ranging? Are we trending? Are we in accumulation or reaccumulation? Or are we in distribution? Because if you just blindly utilize this tool, you will get chopped up and you will lose a lot of money. For example, this tool, the 9 crosses below the 18, you would theoretically exit, right? But the answer would be, if you are in a ranging environment, you don't want to take these trades. If you're in a ranging environment, this is what would have happened to you, right? You would have gone over here, out, okay? Theoretically, this is profitable, right? So you're out over there, you back in over here. Then you're out over here, and you back in over here. And you are out over here, and you're still out. So these are actually theoretically profitable. That was a profit, that was a profit, that was a profit, that was a profit. But this situation, it was lucky. Most of the time, what you'll find is trying to trade in and out of the range like this, you'll get wrecked. So you need to employ the right strategy at the right time. Now, we know that there's this massive bull flag, right, that's forming on the weekly time frame. The monthly time frame also has that huge cup and handle formation, which is also bullish and has a measured move well above $100,000. Now, we'll theoretically be forming the flag portion of the bull flag, or you could view it as the handle for the cup and handle, which is both bullish, right? But to wait for confirmation, same as what I said with the 21 EMA, if you are utilizing the 9 and 18 exponential, well, you need to use all the information at your disposal. So let's go back to this chart over here. The reason I want to go back to this one is because when you study the markets, you'll know that in bull markets, you can get corrections. And in those bull market corrective phases, you can experience 30 to 40% drawdown. Bitcoin was there, and then it came down there, 33.49%. So we have one tick, right? This is not, although it felt terrible, this is perfectly normal. We give it a check mark, tick. The other thing that we know is when you study the previous corrective phases, it's not out of the ordinary to see a correction last, a big correction or a long correction last anywhere from 4 to 6 months, which would have been 4 months would have been here, and 6 months comes into the yellow line. What that tells you is when you are trying to use something like these EMA strategies, the 9 and the 18, when price approaches the 4 to 6 month region within that corrective phase, then theoretically it may be the true signal. It increases the probability that the signal is going to work. So right now it's still towards the downside, right? But what that simply means is that the next time that these start to cross up, there we go. So the 9 crosses above the 18, price breaks above. The next time that happens, chances are very high that this is your major low, this is your higher low. Why? Well, it happened within the 4 to 6 month period. This is perfectly normal within those bull market phases. And now for the aggressive people out there, you can start to look for an entry. For the conservatives, well, you need to wait for a break of this downsloping trend line, also breaking the structure above $65,050. And keep in mind that level changes, right? Remember, go through the course content, because sometimes I look at the faces over here and they look pretty blank. Some of you, not all of you, just like 1 or 2 of you, I can see are looking at me confused. And if you are looking at me confused, it's because you need to go back and have a look at the lessons, because in the lessons, I talk to you about what is a downtrend, right? What is bearish structure? Lower lows and lower highs. This is a downtrend. This is bearish structure. Where does this bearish structure end? When you break and create a higher high, taking out that level, and then you come back and you form a high low. That's your first warning sign. If you get that consecutively, now it's definitely a reverse of trend, right? Because at this point now, you've seen one high, one high low, 2 high highs, 2 high lows. By the time you get the third high and you come back for the third high low, that becomes a high probability shift within the market that things are turning back up. So for the conservative people and the safe people out there, that's probably what you want to wait for. For the aggressive people, you're going to utilize things like the timing, right? Where are we within the timing factor? The next time the 918 cross back up, you can start to look for long opportunities. So there it is, portfolio structuring, dollar cost average. All of you should be dollar cost averaging all the time. Never stop, right? Find an asset that has product market fit, that is disruptive. Bitcoin is that, by the way. Other things that could be that, Tesla. I mean, you can do your own research. I'm not here to be a financial advisor. In fact, I have to say I'm not a financial advisor, and it's not financial advice, but these are the types of things, right? Find things, and you need to go in your own fundamental research, because these things change over time. But when you find a strong asset class, dollar cost average into it. The reason why is this will control your emotions. For people that are in emotional turmoil right now, well, if price is coming down and some of your other positions may be down, if you have a dollar cost average portfolio, what does that mean? It means that you're fine, because you know, okay, cool. Tomorrow my bot buys. Tomorrow I buy. Tomorrow I buy. Tomorrow I buy. Doesn't matter. I'm bringing my average down. Tomorrow I buy. And then eventually price goes up. Same thing when the market is running away from people and it's absolute euphoria. Well, you'd keep dollar cost averaging, right? Because it's fine. I have a little bit of exposure. It's going up higher. I'm not here to chase price. I have a little bit of exposure, a little bit of exposure. So a portion of your at least efforts should be dollar cost averaging. And you can actually go back and have a look at the dollar cost average calculators. I mentioned this briefly on the last workshop. And what you'll find is that dollar cost averaging literally will probably outperform, I would say, 70 to 80% of all traders in the world over time. 100% proven. You can go back and you can look at it. You will outperform the majority of traders, but only if you are DCAing into a liquid asset that has product market fit and is disruptive, right? If it's illiquid, if you're dollar cost averaging into monkey ball, you're going to lose all your money. If you're dollar cost averaging into gummy, you are going to lose all of your money. So just to be very, very clear, you need to be careful. Next, you can split your trading portfolio up into 3 different sectors. A big spot portfolio. This is going to be where you're looking to ride the bulk of the move for weeks to months. Swing trading leverage portfolio. This is going to be lower leverage, and you would probably be trading something like the 4-hour time frame with that. And then your short-term trading portfolio, which is where you're going to attempt to scalp, right? That's for, and you don't have to do this. This is just a guideline. So that would be if you're looking to try and make small gains along the way. So you want to long the range low and you want to short the range high, and you're looking for all those little trades. This is what it would look like, right? So just give or take, this is considered a relatively balanced portfolio. So let's say you have $10,000, $7,000 would go to your big spot trading portfolio. This is, independent of your dollar cost average. That's separate, right? $7,000 will go into your big spot trading portfolio. This is keyword spot, no leverage. No leverage. You can't use leverage. So if the market's going down, you simply hold a cash position with that 70% and you don't allocate until the trend starts to shift back towards the upside. Okay. 20% would go to your swing trading leverage. This you allowed leverage, but typically you'll be taking on less risk and less trades. You want to hold those trades for weeks to months. And then the short-term trading account is 10% of your capital. If you knew, honestly, I'd go even less, like 2 to 5% of your account. I can promise you guys, just trust me on this, most of you are going to make most of your money by getting the right coins in your big spot trading account. That's it. Most of you are going to make it. Like we don't mind. We welcome if you want to leverage trade. Of course, the fee that the exchanges charge you to trade leverage with, because we refer you, we get a portion of those fees, which means the more you leverage trade, the more money we theoretically make. And I'm telling you this honestly, most of your money is going to be made over here. So I don't want you to over leverage. Don't trade too much leverage. Stick with spot trading for the most part, right? Leverage is kind of like your training ground where you make things happen a bit faster so that you can practice the emotional cycles that sometimes take years in spot, right? It takes years because it flows less. Leverage increases all of that. Okay, and I think that's honestly it. I don't know what else we have. What I can mention is also we're going to take questions and we'll give you answers in a bit. But we do have a great trading group. There's Josh, amazing trade over there on injective short. If you guys do want to learn more beyond this and you want to ask the traders questions, well, Whale Room's the place to be, right? Whale Room, we give you all of the alpha over there. All right, Zhao, I see you've been sitting there in the background. I think we've covered a lot, right? That's about an hour of, I would say that was quite a lot of alpha. Let me know in the comments. Did you learn something? I hope I didn't overwhelm you. The good news is that, remember, you can go over here onto YouTube and you can go to the crypto school. Where's the crypto school over here? We should be live somewhere over here. There it is. Here we are. You can always go back to this and you can watch this over here if you want to learn more about this. Oh, I'm not even screen sharing. I'll have to screen share. Let me do it quick. So there we go. There it is. Yeah, it is. You can go to the Crypto School YouTube page and you should learn a whole lot more over there by just rewatching that. Okay.
Nice,
cool.
nice. Great workshop, great alpha. We're going to move to the questions and answers now. I see a lot of people have been raising their hands from the beginning. We're going to bring some of you on stage. And just a quick note on Whale Room. Let me just spotlight myself so that you can actually see a face. There we go. So on Whale Room, remember, you missed your chance to join the 14-day free trial for this cohort. You missed it. But if you want to join it on the next cohort of Whale School, we're going to open the spots again for the free 14-day free trial. But if you really want to join, we share the links in the description. If you complete all the lessons, remember you got a 40% discount on the first month of Whale Room. a lot of people asking for the slides. The slides are, you're going to find them on Discord. I believe the moderators can share the links with you here, but on Crypto School Discord, you have a section with all resources, all the slides from Whale School. You have everything in there. And I think that's pretty much it. We can move on to the questions and answers. I think you guys already know how this works. I see you guys already. Raised hands, cameras on. That's exactly how it works. And let's... Okay, let's bring a few people here. Let's start here with Richard. Oh, shall we bring Chris?
Hello.
I think he's there. He's there.
Up? I'm gonna bring Chris
Hi.
from the whale room too. Let me. Okay, you're already spotlight. Amazing, cool. Welcome.
Cool. What's up, Richard?
Hi, Kyle. How are you?
Yeah, good. And yourself?
Yeah, good. I'm just getting to learn all this stuff and find it fascinating and really interesting. We want to know what's up with the SPY trade. You remember you entered it a while ago on the SPY.
Yes.
And see what's going on with that. And then DeFi technologies. What is your price prediction for those ones?
Okay, let me just quickly look for where do I have my S&P 500. I'm going to bring it into the screen just a moment.
Are you still currently on that trade, or?
I think
Really
it would have stopped. I'll show you why in a moment. Let's just get this back on. Here you have it. So there we go. So Prime XBT, S&P 500 long over here. This would have been stopped. We entered in over here, so it would have stopped out for 4.59% profit, excluding the leverage. We said over here, if you do come into this white line, which is the prior low that occurred on Monday, the 19th of August, so 2 weeks ago, that low, if you take that level out, you're out of the trade. So that's it. That trade like pretty much stopped out today. And for DeFi, I'm not sure which coin are you referring to. Is it a particular coin, or you just mean DeFi in general?
No, it's DeFi technologies is stock. It's not even a coin. But we also bought some of it, and it's been considerably growing.
Sure. Yeah. No, I don't have any thoughts on DeFi technology, but for S&P 500 pulling back, of course, NASDAQ doing the same thing. I think that for the most part, looking at the market over here, it should defend the recent lows that we put. So whatever stock you're in as well, would probably trade similar to the traditional markets. So if you got the low on the S&P 500 at 51.25, and then on NASDAQ you have it at 423, I'd be looking for a higher low somewhere around that region. I think prices will probably bounce, but with short-term downside.
I want to thank you guys very much for everything. I finished the whale course, and yeah, just getting to learn everything, and we're fully in.
Well, you got to practice a little bit of risk management as long as you hedge. Remember, this is also actually some good advice, because we discussed this in Whale Room yesterday with the members. We were looking at price rejecting on Bitcoin on the 4-hour time frame, rejecting off the 50 EMA, which is governing some of the downtrend. And one of the members also said, well, they're also fully loaded, but they entered later in the market, so they're currently sitting at break even. What should they do? Should they just sell everything? And I said, well, what you can do is you can take 20% off the table, take that 20%, and then you can take a leverage trade on 5x leverage using your 20% to short the market off the rejection of the 50 EMA, and that will create like a delta neutral position, which means your spot, obviously, if it does increase, you'll just stop out on the leverage trade and you'll make money on the way up. But it's insurance, right? If the market does come down, which it is right now, then you can just trail the short trade stop loss when you constantly have insurance, right? Because remember, 20% on 5x leverage is equal to 100% of his portfolio, which means now he's in a neutral position the whole way.
Oh, wonderful. Good to know. We sold Bitcoin last night when the when the RSI hit the top on the 4 hour, because my wife is doing Sheldon's course, I'm doing her course, and so we tried that, and so far waiting for it to buy it back. So I don't know when should we buy it back, but looks like it's working. Thank you guys very much for everything.
Thanks, Richard. Thank you so
Appreciate
much.
you.
Cheers. Bye.
Awesome. Thank you, Richard. Okay, let's try to attend as many people as possible here. Bring your best question. I know some of you might have more than one question, but try to select one question that you have to Kyle and the Whale Room team. We have Chris today here with us. Chris, the navigator. Sorry, Christopher Columbus. It's kind of the same thing.
Yeah, we've got Josh the navigator, Christopher Columbus, all with like ocean names. Yeah,
there's an ocean theme on Whale Room.
What should we call? Should we change Carl's name as well from Dupes to?
No, he has a boat already on the background. He's good.
Yeah, there's my boat over there. Cool. We got another question. Jillian, yes. How are you, Jillian? You can just unmute there.
Now?
Yeah, we got you.
I've got a question actually for Chris, because I watched your last Zoom, Chris.
Sure.
Can you hear me?
Yeah, I can hear you.
Said something interesting. Like, I know Kyle is very, very frugal about where he enters coins. You know, like, and he'll wait and be very patient, and you are too, and the whole team is. And so let's take for an example Sui. So Sui's come into like a buy zone, and it's at the best one it's been for a while anyway, but you decided against it because you just don't trust it. This is my interpretation of what you said in your Zoom, because there's not enough liquidity there and you don't trust it. So can you please tell me, because I'm kind of new to this, as like, what is there, like a trading view indicator of liquidity? And is liquidity the same as order blocks? Like, I'm unfamiliar with how to add this aspect into, trying to create a confluence about where I decide to enter a trade. And I don't have that much dry powder left, because I'm just an investor, and I'm probably about, like 18 to 20% down on my general portfolio. So I feel like I want to be very picky about what I select. So does that make sense?
Yeah, well, look, I mean, if you're only down 18 to 20%, you're still in a lot, in the top sort of 10 to 20% of the crypto traders at the moment. So you're still already doing very well, because a lot of people went heavy into altcoins that subsequently bled off of Bitcoin for the last year or over this bull run. So I mean, you've already done well by picking good tokens. With regards to Sui, look, I was at, if you're in Whale,
that's thanks to you guys. So thank you.
Thank you, man.
I'm probably invested in all the same coins you are.
Hopefully.
That's good. Yeah. Well, look, I mean, Sui is showing strong signs of a potential reversal, but where I'm coming from is it's coming into a good buy zone. It's filling into that fair value gap, coming into a reasonable sort of retrace off of that initial pump, but you've still got a lot of liquidity sitting a bit lower down. So we need to try and line your buys up with sort of Bitcoin and the other macro components of the market coming into key bounce zones as well. So if you're DCAing into Sui, it's in a great area to DCA, right? But then always try and, like, when you look at buying into something, look at going like, well, what's my sentiment towards price direction from this point? At what point on a higher time frame as an investor is my sentiment inaccurate? As in, at what point am I wrong with regards to my bet on the market? I bet it's going to go up from this level. Where am I going to be wrong on that? And then you need to then manage your risk and DCA between those levels. So for instance, like if I was looking at 𝗬𝗎, so 𝗬𝗎 took out the lows at around the when it swept under that liquidity pocket at underneath the 50 cent mark, right? And from there we had that sort of expansion to the upside where we broke the downward trend, right? Now the question that comes in is this now a fake change of trend, or is this a real change of market structure? And we'll only know once we've set in that higher low and we start pushing back up and break again. So you need to now manage your probabilities. You know, you're going to look and say, okay, well, the probability is that we're going to set in a higher low here, so let me DCA. But there is still that possibility of one more fake out to the lows at around, say, the 40 cent mark. So let me set also a couple lucky buy limit orders down there if we do go and sweep that liquidity before moving higher, right? So there's a lot of bullish sentiment around 𝗬𝗎 in the long run, or for the bull run. So if you're holding it for the next sort of 12 months, you should definitely see higher levels. Well, let me not say definitely, but higher probability that you'll see higher prices that where you are now, you know, and then just noting sort of the key zones to buy is really where the trick comes in. And like what Carl was saying just now, like just slowly but surely DCA, right? If, for instance, we find that we really hold support above the sort of 60 cents to 70 cent mark, and you start to see that sort of the formation of a cup forming and you start to break out, that'll be a nice area as well to see that a higher low, you're getting a more of an indication that the higher low is setting in. Instead of just expecting these V-shaped recoveries, which are seldom in the market.
Yeah, I think for 𝗬𝗎, I can quickly show you the chart. This is kind of what I'd be looking at. And this is practically how I'd literally execute a trade, or if I were to buy into something. I almost always look at the candlesticks to provide me with information. So I would line up, you know, the area of interest, and currently as it stands, well, this is the fair value gap that you're coming into. So now you've pulled properly into there. I've also identified that there is a little bit of a parallel channel which could be respected. This is of course subject to change, right? We have to monitor, but as it currently stands, you know, you got those wicks over there, you got wicks coming into the mid-range, you got the candles at the low of the lower boundary of the parallel channel, you have the rejection from the top of the parallel channel coming back into the mid-range. So for the most part, there's multiple touch points that are holding over there. And since you're coming into the fair value gap over here, this is the zone where you'd essentially be looking for the higher low, right? So not picture perfect when I'm not really a massive fan of inverse head and shoulders and head and shoulder patterns. They often fail, but it is just food for thought, because the inverse head and shoulder is literally you print a low, shake out, creating a lower low, break, create a higher high. So this would be the left shoulder. This would possibly be the head. Price action rules all, right? So price moved up over here, created a higher high. And now really you want to see a higher low in relation to this area. But the first higher low is always still very, very risky. So you need to really watch. If it is going to respect this parallel channel, you can kind of give it time, right? Let price come down, maybe it sweeps in here, and then you start seeing multiple candles closing, right? Let's say if you zoom in on this candle, maybe you see something similar to that. Maybe you see a candle that looks like it's going to break the whole thing down, and then immediately bullish demand comes in and it closes. Next candle starts opening towards the upside. Now you have more information. Then let's say you were to get another candle that were to come down. Now maybe willing to get a tighter entry and trail a stop loss just to give it a chance to get going. And then sometimes that's what happens, right? This is literally how I would do it. I would just watch prices coming in as it's moving into the zone. Does it look like maybe it's holding? Okay, it seems like it's closing above. We got one strong candle, second strong candle. Now I'm looking to start to enter. Stops go below the last wick over there. We print the third strong candle. I raise the stop loss. Fourth strong candle, raise the stop loss. At this point, I can't lose in the trade. And I'm fully prepared that maybe it's going to stop out. But if it is the start of a new trend on SUI, then that's what I'd be looking for, right? And then hopefully after that point, you just keep respecting the uptrend. But for altcoins in general, I think I covered it nicely in today's YouTube show, where I said that I think most of them are going to find a range-bound environment between now and the end of December, before leading into the next markup phase, which of course is what we discussed over here, right? Into the next markup phase, or the advancing phase over there. But yeah, good question. I hope that helps.
It's fantastic. And as far as the indicators go, just one other quick thing. Like, what was that parallel channel indicator, and what was the best liquidity or order block indicator, would you say?
Sure. I didn't hear the last part of your question, but in terms of this isn't an indicator. This is just a tool over here. So if you go into your charts and I have it saved as a favorite. Where is it here? This one over here. You go under lines. It's under lines, and you go down to, there we go, parallel channel, and you click that. That's a parallel channel, right? So you click it like that, and you can kind of just move it around. So you can have a declining parallel channel, you can have a rising parallel channel. It's just a tool like trend lines, but it makes sure that they're always parallel to each other. So the bottom is parallel to the top, which is parallel to the middle. And it marks out exactly where the mid-level would be, right? So, usually how I would showcase where the 50% level is by using the fib tool. Well, that would do it already for you. If you go from there to there, well, you can see there's 50% is the parallel channel works that out for you.
I set that up. Is there something right on TradingView that can tell me where the order blocks are, or the liquidity, or do I have to get a separate?
There is tools that you can utilize if you're looking for. There's like Chart Prime, Lux Algo. Those are some tools you can just type in over here. Order block. Sometimes they have free things. Look there, order block finder. There's a whole lot. There's one from Lux Algo. So if you click on that. Now, I have a lot of stuff on the screen. I'll just quickly clean it up for you. So let's hide the drawings. Then that showcases where the order blocks are. Or you can, but remember, this is done by a machine, so it's not always going to be perfect. But it does, more or less, it does the job. So then you can see there is some liquidity down here based on that order block that led to the move up. And typically this will tell you that the market's going to range, right? We may actually update the course, just so you guys know. We'll actually cover things like this, indicators that you can utilize. We're gonna start recording like advanced modules where you'll be able to cover all these types of things, like the order blocks and trading the range using those.
Thank you so much, everyone. And I'm loving the Zooms. The Zooms are fantastic. I'm making my way through the Zooms whenever I have a spare minute. All the educational Zooms and everything are fantastic. So thank you.
Cool, amazing.
Thanks, Julian. You're in whale room from what I understand. So there's also a video I put in the educational channel on liquidity and identifying where it is on the charts. So you can maybe have a look at that. It might be helpful as well.
Thanks so much.
Cool.
Okay, awesome. Thank you. I'm just gonna ask you to stop sharing the screen, Kyle, just so I can get back to the gallery. And it's a great reminder, Jillian. Thank you for everyone watching on YouTube. Just two little things before we move to the next person. That is going to be Kevin. I'm going to spotlight you already. For everyone on YouTube, if you're on YouTube and you haven't smashed that like button on YouTube, I don't know what you're doing there. Just smash the freaking like button. And the second thing, remember guys, YouTube is, you're just watching the streams. You can have all the recordings from the last workshops, but it's on Zoom where the true experience of the school is at. This is where we have the chance to interact. We read the comments, all the special giveaways that we do, like whale room stuff, is all on the Zooms. But the YouTube, you can always watch there the recordings too. Welcome, Kevin.
What's up, guys? Thank you so much, Kyle and Chris. And I'm learning a ton. So it's very helpful to clean up my whole portfolio. But my question is in regards to the declining phase. So when you're concentrating your portfolio down into those 1 to 2 tokens, I wanted to know how much or what percentage of your portfolio are you putting into something like Bitcoin in a consolidation or in a concentrated phase, like when the market is declining and you're all the way, you're waiting for the bottom to rebuy back in? Is it somewhere around like 80% you're going to be in USDC or USDT, and then like 20% in like Bitcoin or your top?
Sure. Yeah. Yeah, good question. So I try not to trade in and out on like my big positions, the big spot positions too often. I'm more traded like as a cycle. So I look to gain my entry, which I did between $16,800 and $17,200. That was where I threw pretty much everything that I had into the market at that point. And then I, of course, made new capital along the way. And then I basically saved USDT from October to last year to now, the current date that we're at, which is September, and I'm still looking to allocate that. I think this is basically the one final chance. But when I have all of that, as I mentioned, I don't go in and out too often. So once I've allocated that, and I'm going to ride it up into the peak of the cycle, when I start to identify the signs and symptoms and the probability for a major cycle top, and my final signal or system suggests it's time to exit, I will exit 100%, everything. I won't hold a single crypto. It will be USDT, USDC, DAI, stablecoins. Basically, I'll only hold stablecoins.
Perfect. Yeah. No, that's great to know. Thanks.
Sure. Yeah. I mean, and everyone will do it differently. Just so you know, there's, a lot of astute investors and traders out there, people that I personally look up to, and they won't sell. They'll hold their Bitcoin, pretty much all of it. They feel very uncomfortable ever going out of Bitcoin, but I'm mostly here to ride the cycles of the market. So some people will always make sure, let's just say, just a hypothetical number, like 10. They'll say, I'll always hold 10 Bitcoin, no matter what, no matter how high or low the market goes. I don't feel comfortable having less than 10. Obviously, everyone's going to have different numbers based on when they got into the market. I'm talking about people that got in much earlier, like 2014 to 17. They will never have less than 10 Bitcoin. I personally, as I said, I go all in and then I go all out. And that's how I've made the most amount of money personally.
Perfect. Yeah. Thank you for that. It's great advice.
Cool. Thanks, Kevin.
Nice. Thank you, Kevin. And Kyle, you can't end this cohort before showing your new whip here to the Whale School community, bro. You gotta show us your new car, bro. Okay,
how must I show it? It's downstairs.
So you just point the camera to the thing.
To what thing?
Okay,
I'm in an apartment. I can't. I can show you on social media.
That's the point. I was trying you to show your Instagram because you have the video on Instagram, and it's a natural plug into your Instagram. So there you go.
Okay, I'm gonna look. Where is it? I'll find it for you guys. Let's see if there's any other questions as well while I look for that.
Yes.
Oh, here it is. Okay, I got it. Let me show you guys. So look, I'm a pretty simple person. I'm happy with a Land Cruiser. It's something that I always wanted. I thought a lot about coming here to Dubai and getting a Ferrari or Porsche or something like that. But then when I got here, I realized that you literally can't drive over 120, and the consequences are like insane fines that will bankrupt you or jail time if you can't fork the money out. So I thought it's absolutely pointless to get a Ferrari or anything like that. So I decided to buy the brand new 2024 Land Cruiser, the Prado. So I'm pretty happy with it. Let's see, will this open? Okay, there it is. So yeah, very, very nice. I love it. I'm happy with this car. This is where I'm living, by the way, in Dubai. If you want to learn more about my life outside of crypto, well, come through to 𝗗𝗢𝗢𝗢𝗡_official. Make sure it has the blue tick. That's where we post, what's going on in Dubai. So yeah, I'm happy with it. It's actually the first new car that I've bought because I kind of feel that cars are, well, of course, they're liabilities, they're not assets, they depreciate. But I studied the market here, and believe it or not, a Land Cruiser is an asset in Dubai. Everyone wants these things, and I'll probably sell it at break even or even at a profit. It's a weird market over here.
Well deserved, sir. It suits you very well, sir. Congrats. Okay, we've got Andrew in the house. What's up? Welcome, brother.
Hi everyone. I wanted to ask you guys, how would you manage a larger portfolio? I mean, I don't know if my portfolio is that large. I have about 13 coins, but I gave up on putting stop lossing on them, and I lost about like 30% of my portfolio because of that. Because every time I was taken out, and by the time I would calculate which money would come from which coin to put back into it, I would kind of lose it and the price would go back up or something like that. I don't know if I'm making myself understood well.
Yeah, no, I understand totally. So that is a common question that comes up. I think that you need to choose a number that you feel comfortable to manage. So generally, you know, if it's going to be, you can most of the time, just by the way, most of the money is going to be made in a very concentrated portfolio. When I say concentrated, 5 coins, literally. Again, it all comes down to the Pareto effect or Pareto principle. The top 20% coins in the crypto market are going to provide 80% of all the money, 80% of all the liquidity is going to go into those 20% of the coins. So therefore, your selection is very, very important. I think that you could manage up to 20 coins should you, you know, just have a systematic process where you go through the list each and every day. But even 5 coins is more than enough. I probably wouldn't go beyond 20 coins. And if I did go that high, I would probably go with small amounts. I would make sure that at least 80% of all my capital is probably within 5 coins. So the last 20% of the capital would be split into other things. That's more or less how my portfolio looks. For the most part, you know, I'm holding about 4 or 5 different coins with the majority of my capital. And then even though I take a lot of other little trades here and there, I have a meme coin portfolio, probably like 15 or 20 different coins over there. Those form a very small part, right? 0.1% into each of those coins. So I don't consider that like the main portfolio. It's just like a side portfolio. So I think you need to stay on top of things. This is, you know, asset management. You have to manage the assets, which means you have to check in regularly to see how things are doing. Because it's very rare, you know, that you're going to lose 40% on everything in one go. Like things don't suddenly go from an uptrend down 40%, unless you're in the final phase of the market, which is where the blow-off tops come. Then that can happen. But at this phase, you would have had to have a lot of that money in coins that were establishing downtrends, and you weren't cutting them quick enough. So you have to have hard, strict rules where you say, if this happens on that coin, I'm out. And then you just cut the position straight into USDT. You can think about where to reallocate the USDT later.
Yeah.
Cool.
Yeah.
Does that help?
Thanks.
I mean, it's
It
all about the discipline.
I just went down with the portfolio. I just didn't want to cut the cord, I guess. And yeah, I do hold, most of them are in Bitcoin, ETH, Link, stuff like that. But yeah, I do have a lot of junk, and it's not like just 10% of my portfolio junk. It's like almost spread out thin amongst about 12 or 13 coins, which is pretty much for me, I guess.
Yeah. Well, you see what you just said over there. You said that, you know, you didn't want to cut it. So that's exactly what I'm talking about. That's like, it's the discipline thing where you're like, oh, but I think it could bounce back. This is what everyone goes through, by the way. It's totally normal. The coin goes down and you're like, okay, it's down a little bit, but I think it's going to bounce back. And then it bounces, and sometimes it will even come to break even where you have the chance, cool, cut it. But then you're like, oh yes, you see, that was the bottom, it's in. And now the thing's going to start to go up again. And then it sets in a lower high and it goes down even more, and then before you know it, you're in trouble because you're down 20, 30, 40%, and then you don't know what to do. The lifeline that most of you probably have right now is that based on where we are within the cycle, we have still a lot of time where things can still go up. But I also want to make that as a major warning, because just because if you're halfway through the cycle and new money is going to come into the market, the massive dilution of coins that are out there doesn't mean that all coins will go up. Some coins, believe it or not, even in peak euphoria, will not go up at all. They'll go even lower than what they're at today. So you have to be really selective with what you're choosing.
Yeah, sure.
Cool.
Thank you. Thanks a lot
Andrew.
for everything.
Sorry, I cut you off a little bit, Andrew. Sorry, we're still speaking. Okay, let's go really fast now. I know there's some people asking to talk, but they've been already a few times. So just trying to attend as many as possible, the new people. So we've got Erin here. Just gotta admit yourself there, brother.
Hello, good afternoon from the warming Spain. That's why I have a t-shirt on now. Thank you anyway. I have one question that's bothering me a long time, also with the courses. What the indicators, you have the RSI, you have the stock RSI, but you have also, if you have a high for the weekly or the monthly, the candles. What is coming first where you look at the candles or the RSIs? What is more important where you look at the first time when you're in this range? Because you start with the month, the week, the day, and you look first
Sure.
at the candles or you look first to the indicators?
Candles always. Price action rules everything. Price action is the most important thing because remember, price action moves first and then indicators react to the price action after the moves already happened. So price action, which means the candles in relationship to all the prior candles, is the most important thing that you can look at when it comes to trading. And although, I utilize a lot of indicators to more just help people understand the points of what I'm trying to say from another perspective, because some people think better that way. That's why I show these types of things. In reality, I could leave my charts blank with absolutely nothing on, and I could trade phenomenally well. I don't even need to draw lines, horizontals. I don't need anything because I can line up with my eye where things are based on what the candles are telling me, and I can enter trades like that. I don't need anything else. And I really encourage like the progression that you'll go through in trading. As often you'll start with things like that, easy to use indicators, because it simplifies things, but you should really try and move to a point where eventually you do get to just pure price action trading, and that's the main thing that you're looking at and what you're following.
And this is from the higher time frames, month, weekly, day?
Well, you'd form your bias on the higher time frame. So the higher time frames hold a higher weighting, but you have to understand that obviously they move slower, right? So you could have, for example, a weekly and a monthly uptrend. That's a beautiful trending chart, but you can be caught in a daily and 4-hour time frame range that could last for 6 months, which is basically what we've seen now. So you need to trade the, look at the chart, analyze. Usually you'll analyze like 2 time frames higher than whatever the time frame is that you're trading on. So for example, if you are trading the hourly time frame, then you're going to look at the 4-hour time frame and the daily time frame. So daily and 4-hour time frame help you to confirm your bias. The hourly is where you would execute the actual trade on. And this is generally how it's done. Most people will have a much better time in life if they just focus on the daily and the weekly time frame, because remember what I said, spot trading is where you're going to make most of your money. If you are sitting in high leverage positions trying to scalp in and out, especially when you're new to markets, you are going to get wrecked. Like literally 99 times out of 100, I promise you, you're going to get wrecked. But there's Farouk. You should speak to him about the low time frame stuff. I mean, he's a master at that. He's obviously one of our traders in Whale Room as well. So we do cater for all of that, depending on what it is that you want to move to, and depending on the progression of where you are within your trading career.
Thank you.
Guys. Thank you. Evan, are you Dutch? Are you from Holland?
Yes.
Yes, same. I live in Amsterdam.
Okay. Yeah, I'm living in Spain, but I'm from the
Nice.
Yeah.
So I help the community to scalp lower time frame, and even yesterday we had the Discord stage. We stayed there for like 6 hours.
Whoa.
And everybody enjoyed it. Yeah, it was a long time, but it
Yeah,
was really fun. A lot of alpha. Yes.
Yeah, Farouk makes scalping look easy. So if you want to be in the 1 out of 99 that win, then definitely come learn from him as well.
I will do. Thank you. Thank you, guys.
Cool.
Awesome, thank you. We're gonna move to Naomi now. Oh, sorry, I think I clicked the wrong button. And now Naomi is the only one spotlighted in the whole Zoom session. Naomi, I think you should just take the stage now. It's your show,
There we
Naomi.
go. Hi, can you hear me?
Yes, yeah, we got you. We can hear you.
Okay, I'll be quick. Thank you for everything you do with Crypto Banter. Just a quick personal note. My family's had a lot of tragedy. So I lost my husband last year, and I've got 3 older kids with disabilities. So I'm full-time at home, very limited capacity to work. And crypto banter has just been the sunlight, the happy thing. And there's actually a huge potential for you guys to reach folk that are stuck at home and they can't work. So what I was also wondering about is, if you've only got a small budget, should you leverage at all? Should you just spot and wait? And do you leverage on a long when it eventually happens? And then secondly, maybe you should consider, you've got whale school, a dory school, because I can't share with anyone I know about what I'm doing with crypto, because they presume that I'm on the edge of a gambling addiction, and I'm working with fake money and it's all a scam. So maybe you should consider a dory school for those who used to use an old telephone. The over 50s, some of us, it might need a bit of extra help. But seriously, just looking at folk that have a very small budget, if they have, say, $400, what would you do with that?
Sure, it's a good question. Firstly, well, sorry for your loss and all the tough things that you've been through. I mean, you just have to find something to, hold on to. And actually, for me as well, when I joined Crypto Banter, just before that, I was also going through a terrible time, and I was, studying the markets and watching full-time Crypto Banter as well as many other channels. So I totally understand where you're coming from. I think the advice would be that if you have a small account, there's a saying that says many small traders become big traders and many big traders become small traders. What that simply means is that you can start small and you can become a big trader, but it's all about risk management. You need to have repeatable data that suggests that you can do this over time. So I would honestly start with a demo account, and even of that $400 account, I would risk super small amounts, like as low as 0.5% per trade. I would try and find trades that provide ample opportunity. So trades that because you can't afford to wait for, like the position I'm in now, I can enter in at 16.5 to 17.2, and I can ride it all the way up to the top of the market cycle, and I've made enough money for the next few years. That's all my profits are in that one trade. $400, if Bitcoin goes up, let's say in the best case scenario in the world, 10x is now 4,000. That still won't change your life. So you'd have to probably hone in on some sort of a range trading strategy, a scalping strategy. You would have to become really good at that, but you need the data to prove that you can do it. You can't risk the money unless you're absolutely certain that over 1,000 trades, this was the result. You won 70% of the 1,000 trades. So you'd have to come up with a strategy. And for me, the strategy would be, I would absolutely forget about trades, just write it off, because the market spends 70% of the time in a range anyway. And I'd look for opportunities to find coins that are in perfect ranges and just keep going through the list. And if the market is generally in an uptrend, so the preceding trend on the daily, weekly, monthly, for example, is up, but you're on a low time frame range within that uptrend, I'll just look through the list and just keep looking for something's hitting the range low, deviates, gets back into the range long. But with calculated risk, 0.5% risk, and I'll just keep doing that. And if you can prove that you're succeeding on that over time, hundreds and hundreds of trades, now you can start to take on more risk, 3% of the account. And it may take months to prove that to yourself, because you have to look for enough trade opportunities. But if you can, and you go up to 3%, you'll see how quickly you can compound that account. Then suddenly $400 becomes $800, and $800 becomes $1,600, and it's just doubling and doubling and doubling. And you can go look at the compound effect of a doubled account. But that's the key point. When it becomes a big account, you have to think like a small trader again and reduce the risk, because small traders become big traders, but big traders also become small traders because they blow big accounts.
Lose it all.
Yeah.
Okay.
So that's
Thank you
probably
so
what I would
much.
look
And
at.
maybe just let Sheldon know that there's somebody else who's got a similar story that's found incredible hope from his story. So thanks so much to all of you. Thank you.
We'll send him this clip. Thanks, Naomi.
Thank you.
That's amazing. Thank you, Naomi. And just two things I'd love to say before bringing the last person, which is going to be Robert. Look, we're gonna do the revamp of Intro to Crypto course. We are currently working on it with Ren and Fefe. So we're gonna have a school that is dedicated to everyone new to crypto. It's the onboarding into crypto, and it's gonna be absolutely amazing. The recordings are going absolutely amazing. And the other thing I would just like to say, you know, like when you're doing something, it's good idea not to share it with everyone. It's really important that you share with people that you know that are going to support and understand, because most people are not going to get it and are just going to steal energy from you, and you can just avoid that. You know, you can just concentrate on people that actually support you, and you know, look around you right now on this gallery, on this Zoom, look at all the people on the same journey as you, all available to connect with you, so you are not alone, Naomi. Okay, just a quick message for you on that, and let's bring Robert now.
Hello?
Yes, we
Hey,
got
hey,
you,
hey,
Robert. We
welcome.
can hear you.
Hey, how you guys doing? I appreciate everything you guys are doing. This is awesome. I am learning a lot. I've got a situation where I used to work a lot of hours, so I'd be watching all the YouTube videos and everything, learning about new coins, but I would just buy and hold. And I ended up getting a portfolio of like over 50 coins. And then the market has been going down since like May. And so now I'm at the point where I'm down about 60%. And my question is, at what point do you say, okay, like I've been trying to minimize and get out of coins and go back down. But like at what point do you say, okay, I gotta take a loss on this? Like that's my problem. I hate taking a loss.
Sure. Yeah, that's the biggest thing in trading is that, you know, most people don't want to take a loss because they'd rather hold on to the hope that maybe they weren't wrong on the idea and they were right. It's a weird thing. It shouldn't be a shameful thing to admit that you're wrong, but for some reason in trading and investing, it's a major psychological battle that everyone goes through. Typically, the area that I focus on is, I'm going to bring it up actually because we have covered this before, but I just want to reiterate the point is, this is the area where you want to cap the loss, right? Unfortunately, you are already, okay, let me just skip that slide and let's just go to, here we go, view. So unfortunately, you're already beyond that point. The area is over here. You typically don't want to let your losses get beyond this point because they start to become more and more exponential. So once you're sitting at a 60% loss, it means you now need 150% just to get back to break even. And if you go to 70%, it's 233, and 80% becomes 400 to get to break even. So this is the problem, and that's the reason why cutting your losses as quick as possible is so important, and then letting your winners run. But at the end of the day, this is the predicament you're in. The answer is, for me, at a push, I would allow something to go as far as 20%, just because of the volatility that crypto provides. I can kind of stomach getting a 25% back to get to break even quite easy. But anything beyond this, you can see the gap from 20 to 30, and this goes from 25 to 43%. This is where things really start to gap out of control. When you lose from 20 to 30% is the big, you know, transitioning point. But the question is now, well, what are you going to do now? I think the answer is that the best thing that you can do is you're going to have to consolidate those positions. You're just going to have to take theoretically the loss now, but move those coins into other strong coins, things that are uptrending, right? Like, I don't want to be here to give financial advice or anything like that, but I'm just going to very quickly tell you, or at least in the top of my list over here, the coins that have been doing well and could continue to do well is, of course, going to be Solana. It's very important that Solana holds up at 120, so you could be selling, you know, the rubbish coins into Solana. So you sell straight away into USDT. Immediately, you just buy Solana. You can also do that with Casper. That's another good one to be getting into. As much as I hate to say it, the other one that's still in a super strong uptrend is Tron. Tron if you sell, but I mean, watch for the range low is going to be, or the breakout level, which could be the next high lows at 14 cents. So you still want to use a little bit of technical analysis to make these determinations, you know. Mantra, also not bad, but has had a long run so far. Am I sharing my screen? I'm not even sharing the screen. I'm just quickly looking through. You don't need to see the screen, I guess. So let's see, what else? You're going to need to go through the list. Highly volatile coins are going to be things like Popcat, but are still doing very, very well. I think, let's see how Giga's doing. Okay, not so well. Popcat's doing well, but it comes with increased risk. And these are kind of, this is what you have to do. You need to go through the list. You need to look for coins that look strong. Ignore what the name of the coin is and what the ticker of the coin or the ticker of the chart is. Just focus on, does this coin look strong? Is it above support? So is it holding the support levels? Is it an uptrend with high highs and high lows? If the answer is yes, take the rubbish, cut it, and move it into that. You don't do it all into one coin, because now you have a high risk situation where if you pick the one wrong coin and that starts to go into a downtrend, you're going to lose even more money. But that's basically what I would do.
That's kind of my problem, is it seems like everything rises and goes down at the same time. So I'm trying to find a good point to get out of this coin. But then it's like I need to wait for this another coin that I want to get into or consolidate to go down.
Sure. I think at the end of the day, you need to make the decision to, you know, to cut the positions before it gets worse. There are coins you have to, this is part of the job, right, is, you know, hunting through, looking for opportunities. Another one that I can see right now that's not too bad is HNT, which is, I think this is helium. So HNT, not too bad. You need to go through the list. You'll find there are plenty coins there. When I say plenty, I mean probably like 10 coins, 15 coins that are holding uptrends, which would be better suited for your capital than those ones that are in strong downtrends.
It'd be better to do that than just try to hold it all the way through the bull.
Yeah, I know it's hard. I totally get it. I know it's hard. Also, you need to decide, are you trading this as a short-term trader or are you trading it as a longer-term investor? If you have the ability to get additional capital, you can always bring your average down. But typically, I wouldn't want to add into losing positions. You know, if it's in a strong downtrend, I'm not a fan of adding into losing positions. If it's in a slight loss because it's chopping within a range and you just so happen to not buy the exact range low, then it makes sense that you can take new capital and allocate into the bottom of the range to reduce your average.
Okay. I really appreciate it.
Cool. Thanks, Rob.
Thank you very much, Rob. Kyle, what is the homework for next week?
I think the homework is that. I think the homework that, because this is a question that's come up a lot. We actually had literally the exact same conversation just yesterday on Whale Room. So I think you're not alone. There's a lot of people in this boat. I think that the homework is to go and look for the strong coins. Then next week when we come back, we can all have a look at it. We can see, well, what are the coins that are strong? What are the coins that are showing signs of strength in the form of at least looking like they're reaccumulating, holding the range lows or support levels, and which coins are in uptrends. And then those are the coins that you want to stick with, right? Remember the Pareto principle. I'll just write that down. Look at that while you're looking for the coins. It's going to be the top 20% of coins that will produce 80% of all of the gains within this crypto cycle.
Beautiful. Amazing. Okay, cool. And I think that's so. I don't know if you have any final notes, but I think that's workshop 2. Basically, and we're going to go to workshop 3 on the next week. It's the final workshop of this cohort of Whale School. Remember, guys, you always have access to the cohorts. You always have access to the workshops. The workshops are always different because the market is always different, and we always seek to improve the content of the workshops. So definitely join again. If you want a 14-day trial for Whale Room, join on the next cohort, because we're going to open the spots again for that. And I think that's it for this one. Thank you for the Whale Room team for joining, and we'll see you guys on the next week.
Are we not doing an after party? Are we not doing an after party? We are doing an after party.
Oh, there's an after party on Discord, right?
There's an after party. Yeah. So guys, come hang with Farouk, Josh, and I. We're gonna go through some charts. I've actually just been drawing up a bunch of charts for spot entries that I'm going to be putting into the Whale Room. So I'm going to show them to you guys first. Come hang with us. We're going to be on the Discord.
Cool, amazing. Yeah, guys, join on the Discord. Honestly, they're a wealth of knowledge. Really get to know them. While if you're not in the Discord, this is a great opportunity to see what it's like. And yeah, we'll see you all on the next one. Thank you all so much for joining. Really appreciate all of you guys. Keep going on the journey. I know it's boring and tough in the market at the moment, but the tides will change eventually.
Okay, cool. Thank you very much, guys. We'll see you on the Discord. Cheers.